Hey, what's going on? It's Joel Spark from Spark and Trade, and welcome to my first installment of trade recaps. So, figure I'd do some trade recaps in order to get some feedback on how I take these trades, and I can study the charts kind of individually per trade, and kind of keep myself accountable for the strategy that I wish to apply for every setup that I have. I only have three setups, trying to make trading this random market very simple. And when you see these three setups, I think after some time it would be like very easy for us to spot and execute. So with that being said, let's go to the only trade that I took, um, and let's go into the chart. So really quickly, I'll take you into what my process is in the morning. So we have these lines that come up, right? And these are your supply and demand levels. Uh, the code triggers it when volume pushes price away from a certain area, right? And that's indicative that there's enough pressure at that area to kind of send the market in a certain direction or to stop it from going into a certain direction. So at demand, you should get a bounce, but they broke straight through it, came back to it, it acted as resistance, came back down, it broke out, sent the market up. This stops the entire up move. Now that becomes resistance, down move, right? We're gonna see how this plays into my trade today. So on the 1 hour, I always plot these levels, okay? And then on the 15 minute, I also plot the levels, and the 5 minute, I plot those levels. Those are the only three levels that I plot because as I go into the trade intraday, I kind of want to see where the market could react. And if we look at the history, this is how the market is kind of moving and flowing. It's kind of hard to determine how you're going to play when it goes to the level, unless you kind of have a strategy. And we're going to see what that reversal play looks like today. Um, so I'll put the lines back up. This is your bold green demand. That's your bold red supply. This 15 minute is up here because I chose a previous 15 minute supply, but there was 15 minute demand here at 41.43 on ES. So as we go into the 15 minute, this is what that looks like here. 15 minute supply. Demand is right here. This was yesterday's open. And the market was kind of, it hit this area, which is your 1 hour supply, came down, bounced off demand, 15 minute, rejected supply. So in the morning, I was looking for a bounce off of demand, all right? Simply because there was a 15 minute pressure there, bullish pressure there. 5 minute is the white line, so we can see that clearly here. So this was yesterday's open here, and we had a 5 minute line up here at 41.55, rejecting this level. It broke through, came back down, and it started coming down. So this blue candle is your opening candle, all right? Or this area here was the open. So 9:30 in the morning was the open. So the plan was to let the market go down to at least 41.43 in order to take a long trade for a bounce out of that zone. I also had the idea that they could bounce off of the 200 moving average because that's a pretty big moving average that causes a lot of buyers to step in and feel like the price is at a discount or a fair value in order for the continuation of the trend. So white arrows are going to be indicative of my entries. Orange is going to be indicative of my exits. A green setup is a long. A red setup is going to be for short. The white is the kill zone, meaning this is where I get in and I'm stopping if it breaks below. So I usually apply about 10 points for ES. So at 51 entry, I have to get out at like 41-ish, right? I put it down to 40 just to give myself a little bit of room. So 1 point, nothing crazy. So I'm willing to lose 1 point, almost 10 points to make 20. So I actually have to take it way up there in order to like really make this trade a 2-to-1 kind of trade. Or a 1R is even fine. There's nothing wrong with that. I definitely scale out at 1R. So that's kind of like the whole idea behind my trading. So let's go through the actual trade. Market opens, blue candle wicks up, comes down. I entered at this red candle as we push back above into that 200 moving average, which is this yellow line. My assumption was that the market should bounce, or it could bounce and potentially head higher. So we get the move. We get a nice little bounce off of that. A 51 entry takes me up about 4 points, 3 points, something like that. Didn't take that. Market starts coming down. I'm noticing that we're rejecting the 5-minute money zone. And after I noticed that, I could either bail or I could let the trade work. I'm starting to let trades work. So I let them come back down. And initially, I had a 43 entry in my mind. So I'm like, all right, well, I'm going to scale in down there. Because that's where this green light 15-minute demand is. So they come down to the 15-minute demand, 43, bounce up, get into the money zone again, reject the level. But after seeing this momentum, there's an opportunity here where bulls are showing signs of potentially buying to me. As the market comes back down, I let this red candle wick back up. And then when he came down on this one, as they're going up, entered before they could go too crazy. I had an idea to get in at 42, but I made sure they didn't leave me. 44 was my entry. They are bringing my average from 51 to 46, I believe. Sorry. 47. Sorry, 47. So that's somewhere right here. After bringing my average to 47, which is where this white line is, I'm risking basically now from 47 to 40, about 7 points. So I should at least go 14 in order to make a two-hour trade. Market goes up, comes back down, and then it pretty much bounces and triggers that the bears have faded and the bulls could take over. So I saw some hesitation at this area. We kind of ended up doing the move, and then a 5-minute supply line came in, rejecting the play. But I could have taken this at least to this level, so this entry could have gotten out a little bit better, like a break even possibly. However, everything is kind of hindsight. You never know if it's going to happen. And after breaking out and being in this kind of pain, I didn't want to let the trade kind of get away from me, which is how I'm really trying to get away from trading like that. I really either want to hit target or get stopped out and just kind of call it a day, because if we hit this, it would pretty much eliminate any kind of losses that I'm willing to take, right? So let's just go through why this setup is a reversal setup for me. So as we go through the triple charts and we see the market here, right? This is your opening candle, your 1 hour opening candle. That's your 1 hour. In the middle chart, we have your 15-minute. We have that demand line at 41.43 that I'm trying to defend. The market comes there, it hesitates, you get your wicks, and there's various ways to get in. I'll show you what I found to be the best setup for this. Let the market bounce from that zone, come back and retest it, and you either put your coins with the retesters or you wait for some sort of confirmation of this green trend line break. So this is their 5-minute candles just constantly wicking up there, wicking up there, wicking up there, and then they finally broke it with some volume. I don't know how anyone can catch this candle after the break and not get caught with this wick. It's just something I don't understand. So I don't take the play after we break this area, because now if I enter somewhere up here, my possible loss is still way down there. So in order to reduce my loss, right, which is this green area, I'm willing to not give up 40. If they break through 40, the trade is over, and because that's my stop. If the price is in this area where it's 4 points away from 40, I think that's a better price than taking it at 47, 7 points away from 40. So I'm on a scale in kind of strategy prior to the breakout, and if it breaks lows, it breaks lows. But the fact that I managed to try tried to take the trade here. That failed. We broke down to this level, and now it's where I should have gotten in. Imagine getting this entry and then going for, 4 points. Wouldn't be bad because you were only willing to lose 4 points, so that's 1R. And then it ended up going all the way up here to like 8 points. So there would be your 2R. And this is ES. But I traded MES. So essentially, we didn't get crazy money on it, but the trade ended up, working out the way that I anticipate a reversal play to work out. So rules for a reversal play is you need a 15-minute demand zone because that type of pressure on a macro time frame is essential for the play to kind of like hold the level. So if we see a 15-minute demand or supply, you can possibly take a reversal of the current trend. So in this case, the trend is coming down. We have red candles signifying that this is definitely a bearish kind of trend. On a 5-minute to the far right, we also have that condition. As they push down, bulls pushed up, bears pushed them back down, and now you have your basing out situation that I like to see. After seeing this, you can scale in here, reducing your risk to just $4 or 4 points, and this would be your breakout of the downtrend kind of entry, your confirmation. So there's 2 ways to enter it. You can take whichever way you want, but that's why we take those that reversal trade. So the rule is 15-minute demand line in this case. These dots that you see on this 15-minute, those are take profit conditions. So the market basically broke the Bollinger Band, and most people will take profit when that happens because they got a pretty good move to actually get that standard deviation away from the mean of the Bollinger Band. Once that's triggered, the people that are short who have to take profit will fuel the buying because they have to buy to exit. Buyers at this level will buy to kind of fuel the party. So we're just throwing bullish gasoline on this in this area, and that's kind of what I want to see in order to take the trade or be confident in taking the trade. And we'll see this again. So there was a play. We ended up taking it, not even really 2R. This entry ended up, losing very little, and then this one made up for it. So it was a green trade nonetheless, nothing crazy, but that was the setup, and that was like the only trade I took. The market was like really, really choppy, consolidating, but there's money to be made between these 2 levels. It was like moving almost like 7 to 8 points. Market came back up there, gave us another chance. Now, when it comes back down to that level, you can take it again. And it kind of came down here again, making a higher low. So that was another area that I was trying to think about taking, but I didn't pull the trigger there. So this time we break the highs, and only by a little bit of maybe 2 or 3 points. Yeah, 2 points. And then the market just shoved down based on some bank data. And then they bought it right back up. So then again, this level could be a level that you kind of defend when they come and break back above it. This down move, you don't know how violent it's going to be, so you kind of don't want to get in front of it. And the market moves back up. So what do we have here that triggers a possible down move? So there's a supply line here that's on a 15-minute check, number 1. We have our take profit for the longs, check number 2. If bulls are going to sell in order to take profit, that should fuel a down move. Boom, you got your first one. Check number 3, we get the pullback into that area where we can trigger our entries. So somewhere around here would be where I would have entered. I didn't take this trade, but I would have entered somewhere around here because it's a pullback, and I don't want to see them break the previous swing high. Okay? Either double top or lower high in this case because we're shorting, and this is a good trade. Immediately the market comes back, breaks that so-called upward retest trend line, and this is where most retail will try to get in. They'll probably deal with this pullback. I got to stop up here, probably risking 54 to 57. So that's about 4 points, right? 3 points, 3 to 4 points. And the market, we would probably go way down here, as target number 1. But generally on a reversal play, the bottom of the Bollinger Band should be an area where you start to scale out because you can get a reaction, a continuation of a trend reaction. Now, I can show you that in later videos, but basically that triggers the reversal of this bullish move that we ended up getting, right? and the market overnight did this. So you went, I mean, it literally paid out this kind of move that I was looking for. And this move wouldn't have been so bad if you could hold through it. But given this blue candle that came in from the bank data, it would have definitely, that was a stop hunt. It went and stopped everyone out. So they basically bought it back up. But that would be the reversal of a bullish condition. So basically a short reversal. And I took the bullish reversal this morning. So you can see how that setup is very similar, is rules based, and I don't divert from the rules. But that ended up paying pretty nicely over a long time. It took a while for that trade to kind of formulate and develop, but that's kind of what happens with the market. And I don't want to so 18, 19, 20, almost 20 points, risking maybe 3 to 4. That's a monster trade with some great accuracy, great rules. And I hope that helps you guys understand how I kind of enter these trades. And that's just your reversal play. I can show you the setup for continuation, but this video would get a little too long and I don't want it to. So thanks for watching. Please subscribe, follow, and share. And ask any questions that you have. I'm totally down to conduct some interviews and possibly talk about your learning journey, explain a little bit more about mine, and hash out some strategies, because that's kind of what I'm into when it comes to this market. So thanks again for watching. Have a great day.